All right, it's the moment you've all been waiting for. It's time now for Michael Hakes' top picks. The first one, this is a store that my wife makes a beeline for every time we hit the mall. This is Aritzia, ticker symbol ATZ on the TSX. Michael, why do you like this stock so much?
Yeah, this is one of our favorite stocks in the portfolio. They just held a capital markets day where they outlined their next 3 to 5 year plan. And they have a long runway for growth in front of them. They currently have 68 stores in Canada, but only 44 in the US. They plan to open about 8 to 10 new stores per year in the US. And this will be complemented by store expansions of 3 to 5 stores annually. So what that means is low double-digit annual square footage growth. E-commerce is also expected to stay very strong. So by 2027, you could see sales approaching $4 billion from the $2 billion in sales they're going to have at the end of Feb 2023. We think the stock can trade up to the $65 range from the $50 ranges today over the next 12 months as they roll out their strategy. One of the best times to buy a retail stock, a stock that's Aritzia in this case, with a tried and true concept. Early stage in the US, which this current store is doing very, very well. If they have a long runway for bricks and mortar openings, now combined with e-commerce with strong margins, it's a really good recipe for the next 3 to 5 years.
That's great insight, Michael. All right, let's turn to our second top pick. This is one I've been eager to hear your thoughts on. This is Qualcomm, the tech company, ticker symbol QCOM on the NASDAQ. Michael, what are your thoughts on Qualcomm?
Yeah, Qualcomm's products or chipsets are found in mobile phones and other wireless devices. And the stock has been a little bit weak. It has had a bit of a rally because of lower consumer demand in the low and medium priced phone segment. And management does expect this weakness to persist in the near term. But Qualcomm is in a unique position to leverage all this technology and patent portfolio they have in the mobile aisle into what they are now focusing on is diversifying their product portfolio into autos and industrial, what they call IoT, Internet of Things. For example, the management team has identified the potential for about $1,000 to $2,000 in content per vehicle in ADAS, which means Advanced Driving Assistance Systems. So as we talked about earlier in terms of autonomous vehicles, ADAS, as ADAS rolls out, Qualcomm is going to benefit greatly from that if they can get that $1,000 to $2,000 per vehicle. With industrial and IoT, they're going to be connecting previously unconnected things, and the way they can, the way companies can mine that data and optimize their business models is also another opportunity for Qualcomm. So this diversification of their current business will help lessen the cyclicality of the business, and we think the stock could be up to $150 a month or so over the next 12 months.
Michael, I don't want to put you on the spot. When you say Internet of Things, my mind immediately goes to that Canadian tech darling BlackBerry. They're also in the auto space and the IoT space. Why would you prefer Qualcomm as opposed to a company like BlackBerry?
Qualcomm has a patent portfolio, which includes something called a Snapdragon chipset, which they've been developing over years and years and years. So they have a track record of product rollouts and successful products. It's not at all like BlackBerry. Qualcomm is a proven management team.
Fantastic. Thanks for that answer. All right, let's save our best for last. Your last top pick here is Eli Lilly, ticker symbol LLY on the NYSE. Michael, what are your thoughts on Eli Lilly and why are you recommending this company?
Yeah, we are actually super excited about the long-term outlook for Lilly because they have these new products that are coming to the market over the next year or so. These 5 new products are expected to potentially lead to maybe 40% sales growth by 2025, 2026. They will also improve margins as these products roll out. The biggest opportunity of these 5 is within weight loss. One of Lilly's current drugs, tirzepatide, the brand name is Mounjaro, is currently approved for patients with type 2 diabetes to help with insulin control. However, the real excitement is that this drug has also been found to be helping people lose weight as an appetite suppressant. They are about 1.5 years into a 3-year study of this, and the current results are looking very, very good. 60% of the people, 60, people in the study have lost 20% of their body weight, and 40% have lost up to 25%. So when you look at the US population, even the global population, in the US, over half the population is obese. This drug could help millions of people. But not only that, it'll help reduce obesity-related complications. So that's the real nugget as we go forward in the next 5 years or so. The stock is not cheap, but we believe it will continue to outperform as these new products get launched.
Just a quick follow-up there, Michael, before we end for the day. The street right now is calling for a 12-month target price of about $381. That's a 2% total return. Still an expensive stock. You still think that there is room for the stock to grow?
Yeah, that's right. I think it'll be, as I said, it's expensive and the expectations are there. But I think the growth will come in and the stock will grow, be staying expensive the entire time, but will grow at that super high rate of 15 to 20% as they lump on the sales.